Welcome to Capital Connections, where the complex world of finance becomes approachable, practical, and ready for your entrepreneurial journey. Hosted by Lorette Ferris, the Capital Coach, a seasoned financial services thought leader who has journeyed through investment banking, mergers and acquisitions, business brokerage, and crowdfunding. This podcast is our way to give back. It's our gateway to help demystify your business growth pillars. Each episode is part of our three-tiered multifaceted business lifecycle journey, training series, growth by acquisition, getting investor ready, and exit on your terms. It all starts with our Capital Navigators blog, where each episode is converted here in Capital Connections for those who choose to listen instead of read. Now, we don't stop there. We dive deeper into each topic through self-paced coaching programs, masterclasses, and mastermind groups, transforming this information into action steps for those seeking more. Speaking directly to solopreneurs, micro to small businesses, transitioning corporate executives, and technicians. Our approach? Simple yet profound. We break down high-level financial concepts into everyday language, making them accessible and actionable. Whether you want to acquire a business, raise capital, or sell your company, plug into our Business Lifecycle Journey series. So, tune in, turn up the volume, and get ready to connect the dots in your financial journey. Let's begin.
Let's get started. Identifying your ideal buyer, selling your business to the right hands, understanding buyer personas for solopreneurs and small business sales. Elaborating on buyer personas in business sales. Connecting with your audience is vital in any form of storytelling. When selling your business, understanding the potential buyers is no different. Buyer personas do more than just buzz. They capture the essence of your future customers. Picture them as the main characters in your business sale narrative, not actual people per se, but composites of behaviors and needs and aspirations that are symbolic of a customer segment. With a small business or solo venture, personas help customize your sales pitch to resonate with different buyer types. For instance, an ambitious tech founder looking to expand their portfolio has distinct priorities compared to a strategic investor focused on long-term industry growth. A compelling persona blends qualitative and quantitative research. First, nail down buyer basics, their industries, business objectives, things of that nature. This filters a wide pool into more defined targets. A tech buyer may be intrigued by a niche software solution, while a seasoned retailer prioritizes brand recognition and customer loyalty. Qualitative data through interviews and focus groups provides insight into motivations. Is the buyer searching for turnkey operations or open to a project? Quantitative data, like market analysis, offers hard statistics. Think percentages, showing how many buyers value specific characteristics. Consider Codify, a promising software startup exploring a sale. Codify may pinpoint two core buyer personas: the scaling founder, a young tech innovator looking to accelerate growth, and the strategic investor, an established firm seeking to absorb talent and technology. First, Codify would showcase its product's scalability, and then next, integration capabilities may be pivotal. Defining buyer personas. Defining personas enables Codify to shape sales narratives that speak to each buyer's interests and concerns. This tailored approach draws in suitable buyers and paves the way for an aligned and successful sale. In the complex tango of business acquisitions, grasping what drives different buyers is critical. Their motivations shape who pursues deals and why, influencing everything from initial interest to final terms. Strategic buyers, the visionaries. Existing companies, strategic buyers think big picture, looking past simple financials to growth opportunities. They envision how an acquisition can expand their market share, enter new spaces, integrate technology and talent, or achieve vertical integration. How your business aligns with their strategic roadmap is a long game. Take a major retailer acquiring a smaller online player to transform its digital presence and consumer base. Strategic buyers aim for synergy, combining forces to unlock value greater than the sum of the parts. Financial buyers, the investors. These buyer personas care about returns. Private equity firms and venture capitalists run the numbers, targeting businesses with strong growth trajectories, turnaround potential, or even distressed assets to revive. They evaluate deals through the lens of profitability and exit strategies, while not necessarily in business operations in the long term. Financial buyers want to maximize financial gains. Individual entrepreneurs, or the dream chasers. Personal ambition fuels individual buyers looking to run their own shows. Often aspiring to be their own boss, they bring capital and dreams of entrepreneurship to the table. Drawn to proven businesses with predictable cash flows and calculated risks, these buyers seek operational stability and continued prosperity. Former executives or specialists changing careers look for transactions supporting their professional visions. Family offices, or the legacy builders. Managing wealthy family assets, family offices diversify portfolios while upholding values and building legacies. They scan for high-quality investments, attractive growth industries that align with multi-generational aspirations. Competitors, the market consolidators. Merger and acquisitions for competitors is about domination. Acquiring rival businesses cements market leadership, absorbs customers and technology, or resolves competitive threats. A local cafe consolidating the neighborhood by acquiring a nearby bakery is textbook. Competitive buyers want to solidify their positioning through strategic acquisitions. Employees, the inheritors. When staff bid for their employers, the personal connection often inspires it. Management buyouts or employee stock owners aim to continue a business they feel invested in. By acquiring the companies they work for, employees can steward cherished legacies. Industry-specific buyers, or the specialists. For specialized acquirers, domain experience drives mergers and acquisitions. Seeking strategic assets to integrate into existing operations, they target buys that unlock industry-specific value. Access to new markets, resources, and partnerships motivates their decisions. Grasping buyer incentives isn't just academic, it's strategic. Tailoring your sales approach to resonate with target buyers' motivations dramatically impacts deal appeal and success. For example, showcasing growth trajectories may sway financial buyers, while strategic synergies might interest those with longer term visions. Conducting diligent market analysis before selling a business is like prepping your matchmaking. It spotlights ideal buyers to court. Beyond illuminating your landscape, this research tailors sales strategies to resonate with target interests and requirements. Defining the ideal buyer persona. Central to market prep is crafting a detailed buyer persona. Compile demographic and psychographic intelligence, age, income, location, industry passions, and lifestyles. Understand their pain points. What challenges can your business solve? Consider purchase behaviors also. How do they research and decide on deals? For instance, scalable e-commerce buyers have distinct criteria from those seeking local service companies. Understanding buyer motivations. Analyzing industry size, growth, and trends provides context. Review competitor strengths and weaknesses to showcase what distinguishes your business. Additionally, scout regulations impacting acquisitions. Scrutinizing existing merger and acquisition transactions. Past deals often intelligence gold mines. Examine typical deal structures, sizes, and buyer motivations in your sector. What businesses attract attention and why? If tech companies are commonly acquired for IP and you hold unique patents, emphasize this in marketing. Engaging with potential buyers. Go straight to the source by interviewing and surveying prospects. Direct input fine-tunes sales positioning and presentations to resonate. Leveraging online data. In the digital age, leverage forums, news, and social media for insights. These highlight prospective activities and interests. Business intelligence tools can further pinpoint and track buyers. Network at industry events. Beyond trend spotting, conferences build relationships with potential acquirers. In-person interactions deliver unfiltered intel on priorities and motivations. Partnering with merger and acquisition professionals. Experts like business brokers and bankers amplify success. Their experience, networks, and industry specialization identify qualified buyers and navigate deal complexities. These collective strategies crystallize your best fit buyer, enhancing sale outcomes. For example, an e-commerce solopreneur may leverage targeted online communities while a manufacturer partners with merger and acquisition pros for strategic corporate deals. Rather than just quantifying worth, accurate valuations attract ideal buyers tailored to financial and strategic goals. Strong valuations capture interest and enable smooth deals. Boosting buyer confidence with valuations. Precise valuations build trust. By transparently reflecting finances and growth, they mitigate acquisition risks associated with under or over valuations. For example, ROI, return on investment focused financial buyers scrutinize profitability projections. Enhancing negotiation power. Reliable valuations empower both parties to negotiate effectively. They provide a framework for informed offers and bargaining. Strategic buyers can assess how purchases support their expansion goals. Minimizing overpayment risks. For more risk-averse buyers like entrepreneurs or family offices, accurate valuations prevent overpayment and confirm solid investments. This evidence ensures alignment with personal financial plans, streamlining transactions process. With transparent and realistic valuations, negotiations accelerate, saving time and resources. This clarity assists buyers like industry specialists juggling multiple potential buys. Tailoring valuation to buyer personas. Buyers have unique valuation perspectives. Strategic buyers consider synergistic potential and strategic fit. High valuations may be palatable if acquisitions significantly complement existing operations. Financial buyers analyze using return on investment and profitability projections, valuations emphasizing stellar growth trajectories align with their priorities. Individual buyers often leverage valuations to secure financing for purchases. Realistic valuations aid in obtaining loans and planning future obligations. Recommendations for effective valuation. Utilize professional valuation services for accuracy and credibility. Apply multiple valuation methodologies for a comprehensive analysis. Communicate the valuation approach clearly to build trust. And tailor the process to resonate with target buyer motivations and needs. In short, strong valuations attract ideal buyers by resonating with their goals. It's not just attaching a price tag, but showcasing your business's potential to the right acquirer. Preparing for buyer due diligence. Due diligence represents a pivotal stage for buyers scrutinizing operations, financials, legalities, and so on. Sellers who can showcase their readiness not only demonstrate professionalism, but can more seamlessly navigate negotiations and boost chances for closing successful deals. Understanding different buyer types. Each buyer persona takes a unique lens. Strategic acquirers may focus on operational integration potential, while financial buyers drill down into profit drivers. Anticipating financial scrutiny. Prepare meticulous financial reporting, forecasts, actuals, etc. Be ready to address anomalies, demonstrating transparency, which builds trust regardless of the buyer type. Legal preparedness. Thoroughly organized documentation like contracts and licenses which show compliance. Industry specialists often deeply probe those compliance measures. Operational efficiency. Displaying stellar internal controls, risk strategies, and growth plans appeals especially to strategic and individual buyers seeking turnkey transitions or takeovers. Market position and potential. Furnish market research, competitor, and customer analyses to showcase positioning and expansion possibilities. Critical intel for strategic and industry buyers. technology and intellectual property. Particularly in tech-heavy sectors, detailed infrastructure, patents, and software licenses, high-value information for strategic buys. Human resources and culture. Share employee agreements, benefit policies, and talent management plans scrutinized by buyers like family offices or those contemplating buyouts. Environmental compliance. In impact-heavy industries, demonstrate compliance and green initiatives. Preparation strategies. Organized documentation facilitates efficient review. Anticipate challenges. Prepare solutions. Detailed Q&A documents signal preparedness. Mock sessions refine responses and expectations. Engagement expect support, lawyers, accountants, etc. Tailored approaches. Customizing due diligence preparation for specific buyers optimizes outcomes. Strategics may request integration specifics, while financials drill down into the projections. Thorough due diligence preparation, tailored to buyer types, enables smooth negotiations, builds confidence, and drives successful deals. Transparency and communication remain paramount throughout. In closing, selling a business is far more than a financial transaction. It's an intricate process demanding strategy and alignment. More than just deciding to sell, it requires deliberate steps to transition your legacy into fitting hands. The journey spans understanding your buyer's interests, motivations, and expectations, presenting your company attractively through accurate valuations and diligent preparation, and navigating final negotiations smoothly. When executed skillfully, these phases harmonize, transcending a mere asset transaction into a narrative-like closure, rewarding for both you and your successor. Fundamentally, think of this process as crafting an impactful story. The genesis begins defining personas and the buyer archetypes, while setting the stage requires research to target prospects. Navigating climactic moments like due diligence hinges on aligning details with buyer goals. Cohesive endings depend on resonant valuations and transparent communication. By embracing this narrative with you as the visionary author, the sale transforms from transactional to fulfilling, an odyssey concluding your chapter and launching your company's next era under optimal ownership. With mastery of objectives, buyers, and milestones, you pave the way for a win-win baton passage.
And that wraps up another enriching episode of Capital Connections. Thank you for joining us this week to navigate the ever-evolving landscape of business and finance. Your journey toward growth and success is our top priority. You can stay connected to our offerings by checking us out at iBOSSinc.net, subscribing to our Capital Navigators blog, following our company page on LinkedIn, registering for a masterclass, or joining a mastermind group. At Capital Connections, our mission goes beyond simply sharing knowledge. It's about crafting transformative experiences. So, until our next encounter, stay on the path of connecting the dots in your financial journey, and let's continue in our joint journey of growth, innovation, and leadership. Thank you again for tuning in, and see you in the next episode of Capital Connections.